All
Good.
right, cool. So I'll pip talk. So I'm gonna go over pips real quick. You guys can ask questions, whatever. But I'm just gonna go however what a pip is, how to calculate a pip. Now, well, first of all, let's look at the markets and the pips real quick. Let's see. Perfect spot right there. Just let me make this smaller. I'm pretty particular on how I have my shit. There we go. All right, so the way pips work, and when you're going into your phone or your broker or whatever, and you're going to put in what lot size you want. This is determining how much, if it's a 10 pip trade, a 20 pip trade. This is how you can figure out how much money you're risking or you're about to actually make. So like let's say it's a 20 pip trade, and you're doing a point zero 0.01 lot. Well, every pip is 10 cents. So if it's 20 pips, it would be $2 that you would be risking. Okay. Now for right here, if it was 20 pips and on a 10-cent lot, dollar per pip, that would be $20. So you guys see right here, a dollar a pip, and it moves,
And per pip.
then it's $10 per pip. If it moves 10 pips, that's $100. So if you catch 20 pips with a dollar lot, 20 times 10, that's a
200.
or that's $200 in profit. $200 keeps the job away. And honestly, that's what I do is I do a dollar lot and I do a 50-cent lot every single time I get into a trade. I'll explain a little bit more on why I twin trade here in a minute. But that way you catch 20 pips. I mean, you should only be trading. Yeah, I'm about to tell you guys what lot sizes you should be using too. So, if you have a $200 to $300 account, I would not use any more than a point zero 0.02 or point zero 0.03 lot size. Honestly, anything under point zero 0.03 and under. So, if you did a point zero 0.03 lot size, then that would be 30 cents per pip. So, 10 pips would be $3. Does that make sense?
Mm-hmm.
Okay,
Yes,
so
sir.
now let's look at the pip so you can actually see like which one is the pip, okay? Well, your first number right here on the right, no matter where we look, we'll look here, we can look over here where the numbers are all different. No matter what this first number is here on the right, that's your pipette, okay? That's called a pipette. The number before the last number is the actual pip, okay?
Okay.
So we'll just look at these red lines real quick and count the pips. So if it moves from 0.27544 to 0.71945, honestly, guys, you don't look at the 5 and the 4. You're just going to look at the 7254 and the 7194 and do your math right there. Well, honestly, what I would do is I would just do 54 because that's the last two numbers, and then minus the 95. Now we know it's going down, so it would be about 60. What is that? 60 pips. Yup, that'd be 60 pips if you guys see what I'm saying. Because it dropped from 5.4 to 9.5, which but it was really 0.725. I know I explained this one hard because it's going down a whole entire another level of numbers. But as you can see, it was 0.725 to then 0.719, so it went down 60 pips. Now I'm gonna go to another one and show you. I'm gonna go to a bunch of them and show you guys different. Yeah, I don't want to bookmark. Show you different examples. Like let's go in the upward. Let's go in the buy situation. Let's say you get in right here at 105.83, and we want to calculate the pips to 105.735. Now again, we don't look at this last number. We don't look at this last number. We just look at these two numbers. So 73 minus 18. That would be 53 or 55 pips. So 73 minus 18, that's 55 pips. So if you were using a 10-cent lot, that would be, a dollar per pip. So 55 pips, that'd be $55. If you were using a 0.01 lot, that'd be $5.50. If you were using a dollar lot, it'd be $550. Let's go
Damn.
look at a different chart, okay, and look at the pips.
So when you say that, this is what amount of money is in your account at that point when you're saying that? What's the base number when you say you trade at 0.1, that's this, you trade at 0.01, it's this, you trade at 1.0, it's this.
Okay, I'll give you guys the exact what you guys should be doing. Account size risk. That's what I'll say. So anywhere with $100 to $300, you want to be doing you want to be doing 0.01 to 0.03 for your lot sizes. Okay. Now, if you've got 500 to 1,000, I would not even do any more than a 0.10. Not even 0.10 to 0.3. No, just 0.10.
Oh.
Because you catch 30 pips, that's $30. You know, we caught 2,500 pips last week. That's $2,500. You know,
Right.
so that shit adds up fast. Like a 10-cent lot is pretty reasonable because I mean, you catch 20 pips, that's $20. I mean, that shit adds up pretty quick. You know.
Yeah.
Mhm.
Plus, you're risking less, right? So if you did like obviously, what was it,
$20 for a 20 pip trade.
Yeah, exactly.
You know, if you're going for
so you won't just blow your account just even if you took a loss on something.
right.
Right.
So if you have a stop loss of 20 pips and your first take profit's 20 pips, then you're risking 20 for 20. You know,
Yeah.
me personally, you're going to see my trades are going to be my stop loss will be like 15 to 25 pips. So my first take profit's going to be like 30 pips. My second take profit's going to be like 60, and then my third one's going to be usually 100 to 200 pips.
Okay.
And that's the reason why I'll put 2 trades in when I'm trading too, which I'll show you guys what I mean in a second here.
Gotcha.
Now anywhere from 1,000 to 3,000, then you can move your limit or your lot size up.
Yeah.
To still 0.10, but you can go up to 0.5.
So 50 cents.
So 50 cents a lot then.
That's still a lot. I'll put
So
trying to make it so it's not so scattered or doesn't look so together. There we go. So yeah, 10 cent to 50 cents. So 50 cents, guys, that's a lot. You catch 10 pips, that's $50. So if you're risking, if we're talking about the 50 cent right here, and we're risking 20 pips, that'd be $100.
Yeah.
Wow.
Yep. Because 50 times 20.
Yep. So 10 pips would be $50 because it's 50 cents. Basically, whatever your lot size is, what I do in my head, I don't know why they don't teach this, but just times it by 10. Because all it really is your 0.01 is the first number that I told you to block out.
Mm-hmm.
It's just easier to read it, you know, by taking that out because then you'd be just having to add more numbers and shit. You know what I mean? So that's why they made the word pip, I'm guessing. You know, but basically all you're doing is timesing this by 10. You know, so 50 cents times 10, that's $5. So if it moves 10 times, 10 times 5 is, you know, $50.
$50.
Yep.
Mm-hmm.
So
and you're taking that as the percentage of whatever you're trading with, the amount of money you have in your account, basically.
This is what you should be trading with, depending on what you have in your account.
Perfect. Okay.
So if you have 100 to 300, you should be trading 0.1 to 0.03. 500 to 1,000, no more than a 10-cent lot, which means $1 per pip. Now, once you get to the 1,000 mark, and you're going to anywhere from 1,000 to 3,000, you can take that from 10 cent, do a 20 cent lot or a 30 cent lot. What I'd obviously recommend is do 10 to 20 cent lots, and then once you get to 2,000, do 30 to 40 cent lots, and then when you get to 3,000, do 50 cent lots. You know what I'm saying? And all that's
Mhm.
happening is you're going to be doing the same kind of trading and catching the same amount of fish, you're just gonna be making way more money.
Mm.
Yep.
You're going to be
Got
making
it.
50 times the amount of money you were making at the beginning with a 0.01 lot.
Right.
50 times the amount once you get your
Gotcha.
account up. That's why I try to tell people, take this, like, don't rush into this, because you're going to get to this point if you don't blow your account. And the only way you blow your account is by being stupid and doing
And
crazy,
doing that.
huge, lots. Now, if you do this and you do this the right way, we win more than we lose,
Yeah.
so your account is going to grow. So you're going to eventually be able to get out of this if you don't have enough money to put 500 to 1,000. And this goes for everybody, that's watching this on replay or anything. If you don't have enough money, start with this. That's fine. You're going to get to the $500 point. Then you're going to be able to up your limits. And guess what? Getting from, 100 to 500, it takes a little bit of time, but getting from 500 to 1,000 is going to take you probably not even close to half the time, probably a quarter of the time, because you're making 10 times the amount of money. And then once you come over here, you're making 5 times more than you were right here. So it's not going to take very long, guys. As you can see, this can stack very, very fast.
Yeah.
Very.
Oh
Compound.
yeah, 100%.
Compound interest.
Yep.
Yep.
And then as you go from there, as you get any higher, you're gonna obviously, by the time you have a $5,000 account, you're probably gonna know, what to trade with. But then you can be trading your dollar lots,
Okay.
because that's what I do, is I trade a dollar lot. So I'll keep that right here. Um, Now let's get a little bit into trading and stuff like that. So we've got the pips. Anybody got any questions about pips? I know it can be confusing. Like, you guys want me to go through one more example, like on a random pair?
Just for safe measures, go
Yeah,
for it.
yeah, for sure. Okay, so I'm just gonna put two random lines, and then we're just gonna do the math from it. Perfect too, because it's gone up a lot. So for this instance, we're looking at to see how far it's gone up from here to here. So 1.3410 and 1.3258, because again, we don't look at that last number.
Hmm.
Now, what I see is it's moved over 100 pips. So let's see real quick. 582, so 60. So what about 160 pips? Yep, so 160 pips. So what you would do is you would do 341 minus 325. 341, 325, 341. Let me get my little calculator out. That way you guys can see actually what I'm doing in my head. Let me know if you guys see calculator. I don't know if you guys can see my screen, but
Don't see it yet. Should pop up though.
I got to be able to search. Cal, they don't have a calculator on here.
You should be able to control find it. Control F.
That's what I'm.
And
That's what I'm doing right now.
Are you trying to share it, Michael?
I'm just trying to find a calculator real quick so you guys can see what I'm doing. But all I'm doing right now is I'm doing 341 0 minus 3,258. So you don't really got to look at this 3, because the 3 is pretty much irrelevant. So I'm really just looking at the 3. Well, sorry, I keep looking at that number that's moving. I'm really looking at the
410.
3410, because the 5 is irrelevant, and we're looking at the 3258 because the 2 is irrelevant. So all you're really doing is minusing 3410, so 3,410 minus 3,258 and whatever that comes out to, which I think is about 160 pips, or is 160, that would be your pips.
Got it.
So basically minus everything. You just don't worry about the last number, and then just minus the other two.
Got it.
So I'm gonna do one more, honestly. One more. We'll do one that's really close too. All right, so right here, we're at 0.31263, 0.31934. Now this one's super simple. We don't look at the last number again. The 31 and 31 is still in the same thing. So 93 minus 26, that's another like
67.
7 pips. Yep.
67 pips. Yeah.
Yep. So 60. See, you got it. Okay, cool. So 67 pips right there. So let's do some math real quick again. 67 pips on a penny lot, that would be $6.70. On a 10-cent lot, that would be
67 bucks.
67. A dollar lot would be 670.
Got it.
All right, so let's get into some trading now. So now that we understand pips, understand a little bit what we're risking, when it says 20 pips, now if you're doing a penny lot, you're risking $2. If you're doing a 10-cent lot, you're risking $20. So let's get into the chart. So first things I do when I get onto any chart and I actually start marking up what we're going to be learning right now, which is called support and resistance, is the trend line. I'm going to get off this pair, honestly. What's the one that I just deleted everything off of? GBP, JPY. There we go. We'll still have this stuff up here. Just make it a little bit smaller. Boom. All right, cool. So the first thing I'll do is I'll get on the day chart and I'll mark my support and my resistance. Now, basically your support and resistance, I'm going to change the word for you guys so it's not so confusing, but people are still going to use the word support and resistance. But think of support as your floor, okay, where price can't break, like down here. Yeah, every time price comes down to this area, as you guys can see,
Back up.
it goes right back up, right?
Mm-hmm.
So think of it as like a bouncing ball. This is basically the floor, and it keeps bouncing off of it every time it touches it. Now your ceiling is going to be your resistance. The times that the market touches, that area. Now the reason why I put it right here and not, up here, or where it's got multiple touches, it's got multiple touches right here. The reason why I'm putting it right here is because I see that before price was actually down here, it was holding right here as a floor. But then once it broke below and came back up and retested, it held as a ceiling, which is your resistance. So think of resisting like it's resisting you to go up. So that's your resistance, which is your ceiling.
Mm-hmm.
Think of ceiling as resisting you to go up, floor is your support you stand on. So it came back up and I see that it hit that, and it stayed below and has been, the resistance, or what I like to call, the ceiling, and it can't break above that. So we're looking at the day chart too, guys. I always start my markups, on the day chart, just to get the big, because once what we're looking at, guys, what the day chart means is that every single candle represents one day. This was yesterday. This was the day before, the day before, the day before. Now, when we go in and we go into the 4-hour chart, now every candle represents 4 hours. Okay. Now, when you're on TradingView, which I highly recommend to all of you guys to use, it tells you when that candle is going to actually close right here. Can you guys see that?
Mm-hmm.
2 hours, 1 minute and 15 seconds. So, that closes at 1 o'clock. So it closes at 1 o'clock. Every 4-hour candle, you're going to, just learn. It closes 1 o'clock, 5 o'clock, 9 o'clock, 1 o'clock, 5 o'clock, all over every single day. But
Mm-hmm.
always come over here and check to see when it's closing if you don't remember all those times. But so now we're looking at data, for, isn't every 4 hours and not every day. We're still looking at the same chart. Let's go back to this day chart. We're still looking at the same chart, but we're just looking at more data throughout a longer period of time. So let's link back into the 4 hour chart. And then again, we're going to draw our major support and resistance as we dial down and get down into the 1 hour chart. So hold on, whoops. So we're on the 4 hour chart. Now let's see, our major support and resistance areas. Now, honestly, what I see here, let me zoom it all the way back out, is I see heavy support right up here. Price is having a hard time breaking up here. But I also see that this is heavy support and resistance too. Like, you see how price was stuck in between that area?
Mm-hmm.
Now, what we would be waiting for, which I'll show you guys in a second, is the retest, and it never happened. But price was stuck in between the support and resistance area, then it finally broke. Now, what I look for in a trade is I look for the trade to come back and retest this area, and then I would have got in for the sell, but that didn't happen. I'll show you guys here in a second what I mean by that. But this was stuck in support and resistance, finally broke. As you can see, it just plummeted after it broke through the support, your floor. So then, as you can see, it kind of respected its old, like your old support and resistance seems, the past represents the future so many times. That's how we're able to actually be able to foretell the future, because the past represents it a lot of the time. So let's go ahead and look over here real quick and draw up some more support and resistance. And then you also want to see which way the market's trending. So if we're looking at the market right here on the 4 hour chart, the market, it was trending up. If we look at the low here and the high here, the market was trending up, right? What I mean by that, higher high, higher low, higher high, higher low, higher high. But now we actually have this is actually lower than your last high, and it also broke your trend line. So what is that telling you? Price is
About to reverse.
about to reverse. Exactly. Now all we have to do is figure out where to actually get in the trade at. I'm going to show you guys a perfect example of what actually happened and how this trade actually executed perfectly. So I'm going to show you exactly how you would have actually got into this sell if we were actually watching this, because you guys would have already had the trend line set up, so let's say you were looking at the market like this. You got your support and your resistance. So what I'll do is, you're going to have multiple areas where you can see, that there's support and resistance, which is fine. Which is totally fine. You're going to see multiple areas, but I can see right here multiple times it tried to touch, it couldn't break, couldn't break, couldn't break. It barely went over, but it was, as soon as it came right back down. You know what I'm saying? Barely went over, it came right back down. But as you can see right here, price broke it. It actually retested it, and you saw the green candle, and it continued to go up. But that's not what I'm looking at. What I'm looking at is, we see here price actually breaks the trend line, right? Now, if we draw our support and resistance right here, price, when it came up here, this was holding as a new support, right? Now, what I like to wait for is either a price to break support or resistance. Now, right here, price broke resistance, but what I wait for it to do is I want to see it come back and actually see a green candle form on top of this red line to show me that this resistance is now a support. So I want to see that this ceiling was broken and now is the new floor. But the only way by showing that is if there was a green candle. But as you can see, no green candle was formed on top of that. It went below the line with the red candle, showing that the trade is not holding as a support. It is still the resistance. And what did it happen? The trade ended up continuing back down, and forming as, the resistance like it did over here in the past. Just
Mm-hmm.
like that. It's the same, that's the same line. But look, So what we're looking for is, again, a price to break. So look, right here, price actually breaks. You see that? Price breaks that support, and it also breaks the trend line. Double confirmation.
Mm-hmm.
Broke the trend line. So now we know prices, moving in a downwards, in a down way. It broke support. So now all we're waiting for is it to come back up to this red line and retest. Now, if it's a green candle and a green candle just goes right back into the zone, then we're going to get out of the trade. We're not going to get in the trade. Kind of like here, a red candle just came right back into the zone. But if we can see it come back up here and test, and we see a red candle form, hop in the trade immediately once that whatever you're looking at, the 4-hour or the hour chart, once that candle closes, and I mean close and move to the next one. If it's red, then you hop in. So let's see what happens. Boom, the trade, you see it hits the red line, a red bearish candle forms, showing that the support, the floor is now the resistance, the ceiling. And then what did it do? It hit it and then it dropped. I mean, guys, it's almost like perfectly. I mean, you see now that we back up, you see price break. It just looks perfect now that I have it all drawn up, but I'm actually going to delete it real quick. And see, I can actually see this. You're going to get to a point where you can actually almost see the market without even really drawing anything. But once just having it drawn up just makes it so much more simpler. So I'm going to draw that again here for you guys. Whoops. Is this making sense so far, guys?
Yes, sir.
Mm-hmm.
Okay. So let me hop into what's going on right now. That way we can figure out what's about to happen. So again, we would draw our major support resistance areas, because we're looking at what's going on right now. Okay. So boom, boom, because it's been stuck right here. You know what I'm saying? It's been
Mm-hmm.
stuck. So once price breaks, I don't care which way it breaks. I really don't. I just want to see it break. If price breaks up here, we're not getting in the trade for a buy or anything like that. We're going to be waiting for price to then
Waiting
come
for it
back.
to retest.
Yep. And if we see a green candle form right here, then we'll hop in for the buy, which I'm actually going to draw a zone right now. When I draw my zones, what I'm doing is I'm drawing from the highest candle from the body to the wick. What I mean by wick is, you see that little wick right there?
Mm-hmm.
I'm going to explain to you guys what that means real quick too. I'm going to draw it from the body to the wick, and then if you just double click on it, just put a 0 at the end, make it a 4-digit number, and it will drag it all the way across.
Oh, snap.
So then it actually makes it a little bit easier for you to read. You know what I'm saying? So now if price breaks, comes back into this zone, it doesn't have into this zone, and you see a green candle anywhere in this zone, buy it after it breaks and comes back. Because you can already see every time it comes up here and hits and there's a red candle, it forms as resistance and goes down. So if you see it go up and hit and you see it form as support, then if it's support, the only way for it to, for it to go, if this is support, is up.
Mm-hmm.
That's it. And you guys, you're looking at super small stop losses. When you get into a trade like this, you put your stop loss like literally like right in the middle. Because if the trade starts coming back into here, you don't want no part of that when it's right here. Because what's it probably going to do? It's
Keep
probably going to
dropping.
come right back down here. You know what I mean? And then you're going to be sitting on a trade where you bought up here, hoping that it bounces and comes back up. But it could start going down here, and then you get out of the trade and lose a bunch of money, and then it does actually come back up to your price, and you get super pissed. But that's why you just put your stop loss right here. Honestly, get in the trade. Don't look at it. Honestly, don't look at it. Maybe check back in an hour or two, and if your trade's 20 pips in profit, then take some profits and then move your stop loss to break even, which means move it to where you got in at. That way, if price ever does come back, you've already made some money, and you get out with
Cut your losses.
cut your loss. Well, you cut your losses and you made a little bit of money, and then if it
Mhm.
continues to go, you just keep moving your stop loss up with it into profit. Like let's say price does come back and hits this and retests and goes up. Say it goes up to here, I'd then move my stop loss, somewhere around this point,
Okay.
just to secure not only more profits, but now if price goes backwards, we're still going to make a profit.
Hmm.
So now same thing for here though. Whoops. Ah, sugar. How do I just delete that? There we go. Okay. Same thing for here. I'm looking at this bottom candle, guys. Damn it. Well, I'm just trying to delete it. All right, there we go. All those wicks right there and stuff. So if we can see price break, honestly, I would draw it a little bit lower because of this wick right here. There we go. And then if you always want, you can drag it across. Why isn't it letting me right now? You guys saw me do it last time. Hold on.
I think it's clicking the line and not the highlight.
Yeah, there we
There
go.
it is.
All right. So there's our two zones. So all we're waiting for on GBP JPY is price to break either or. I mean, right now it looks like it might break on the upside, but we don't know. It could do exactly what it did over here, hit it and come right back down. Some people do. They trade, off the support and resistance. Like people are selling right now and hope that it's going to come back down. Um,
Mhm.
that's some people's trading strategies. Me personally, I don't like doing it because these wicks guys are what is gonna kill. What'll kill you if you start doing shit like that. Like I'll show you, for instance. Let's say you were playing that game, support and resistance.
And the wicks are basically just not those wicks aren't closing yet, or the candles aren't
Where
closing yet.
price was like, look, see how price is up right now. Watch this wick. Or we'll go to a. Let's go. We're gonna go to a 1 minute chart. Okay, but this only represents 1 minute. But look at this. So it's got 3 seconds left, 2 seconds left. All right. So see how it's starting out red right now. Now it's green.
Mm-hmm.
That's the wick is where the price has been in that minute. So right now it's going down right now. So now it's going to have a little bit of a wick at the bottom because it went down a little bit for that minute. You see what I'm
Oh.
saying? So if we look at an hour, that's what it did in an hour. But it's showing you like right at the end of this, it's going to show you what it really the body is where price moved from, you know what I'm saying? Like right here, this candle, price went all the way down, price went all the way up, but it didn't move
That
that whole minute.
makes so much more sense. I've been trying to figure that out for the longest.
And these will show you patterns, which I'm going to get into in the next recording video because I don't want to get into too. See how it was just green?
Uh-huh.
See, it's going to close here. One, boom. It's going to close there as a red candle. So what I'm saying is, now let's go back to here. People will try to trade off the support and resistance, like I was just talking, like we were talking about, like, oh, well, it's gonna go down, da 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 da. Well, let's say you were playing that game, right? And you bought it right here because you think it's gonna bounce right back up, or let's say right here. Well, price went all the way down, came back up, but what I want to show you guys though is, whoops. Right here, let's say you were gonna buy it, right? Because it's holding, right? It held there, held there, it held here too. Well, look at these wicks. You see that wick? Tell me if you weren't to buy that trade right there and you seen a red candle like that, you wouldn't get out. You'd
Oh,
be
yeah.
scared as shit. You'd be like, fuck, my trade's going wrong. I mean, you should be getting out of the trade, but then what does it do? Hops back right up, and it doesn't even look like that happened because of the wick. You know what I'm saying?
Mhm.
Yeah.
See that? You don't see that, but in real time, this candle was all the way down here, all the way fully red, fucking with your head, fucking with your head. That's what I'm going to tell you guys right now. Trading is 90% psychological, 10% actually knowing where the fuck the market's going to go, because it's pretty fucking easy to tell where it's going to go. You know, after I've showed you guys just a couple little things. I mean, look at the support and resistance right here, guys. Price breaks it, right? What does it do? It
Mhm.
comes back, retests, green candle, and it buys.
Yep.
We know what it's going to do, but it's these wicks and stuff like that that fuck with your head. And that's why you never trade like, oh, like right now, people are selling it right now because of this, right? No, we're going to wait for it to break, come back, retest, and then see
Then get in the trade for the buy.
exactly. And guess what? Our stop loss is small as fuck.
Mm-hmm.
Mm-hmm.
If we get in right here for a sell, we'd have to put our stop loss like, you know, like up here, because what if there's a huge ass wick like this one?
Right. Okay.
Huge ass wick takes you out of the trade. You know what I mean? Literally, come the trade could go all the way up here and come all the way back in the same hour or whatever. Take you out of the fucking trade. You log in the next morning and you don't even see. You just see the candle closed right here. You're like, why the fuck am I out of the trade? Well, the wick took you out of the trade, and then the price came all the way down here like you thought it would, and you're like, why the fuck didn't I make money? Well, it's because the wick hit your stop loss, and then the price came down there.
I think that happened in a trade last night that I took too.
That
It ended up turning around.
it'll happen to me. You know what I mean? But you know, as long as you be patient, like just continue patient. Like I see people, and I get it too. This is how I was the first 2 years of trading, especially when I'm in a group of people that are doing it too, and I hear I'm talking about making money and shit. I'm like, yo, I want to hop in that trade. Like, or someone will say that they're, you know, we're, you know, up 10 pips in a trade. Do never, ever, 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 guys, never chase a trade. Never chase a trade. There's trades going on right now. You could get in 100 trades right now, literally. But should you know? You know what I'm saying? You can get literally that you can trade on fucking Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. The only day you can't trade is Saturday. So there's definitely a lot of fucking times to, you know, get in. Excuse my French, you know, guys, but there's definitely a lot of times, you know, for you guys to get in to a trade. You just gotta wait for the setup. Like this, I'm gonna get off my computer. I'll come back. We know, guys, if you think about this, it's gonna take at least 3 hours for this to set up. If you think about it, because we need at least one candle to break above it, right?
Okay.
That's 1 hour because we need the candle to close above it. Because you guys got to remember, you got to wait for the candles to close above. So in 40 minutes, this hour candle is going to close because we're on the hour chart, right?
Mhm.
So we've got to wait probably 2 hours for this to, if it breaks right now, you know, it's going to go, the candle's going to break it, and then we'll have a broken candle, and then people are going to start buying it because they see it broke, which is fucking stupid, because we all know price is probably going to come back down and retest. And that's when all these people that buy it, because look, like people right here, they'll see, okay, they'll also trade like this. They'll trade off support and resistance, and they'll see like, okay, price broke support, and then they'll see it selling, so they'll get in for the sell, right? Because it broke the support and it's going down. Well, like for instance, right here, they see it break, they get in for the sell right here, and then all of a sudden the price is going back up, and they don't know what the fuck to do, you know.
Right.
So that's why we wait for the retest to make it simple. Like right here,
Mhm.
boom, it came back, it hit the line, it actually gave you a fucking candle. This one gave you no bearish candle. You know, see what I'm saying? It broke it. And when it came into that zone, did it give you any red candles?
Nope. All green.
Okay, it broke it again. What did it do? Gave you your red
Gave you a
candle.
red candle. Gave you the sell.
Exactly.
I like it.
The dumbass who got in right here because he's chasing the markets, he's scared that he's losing, that he's going to miss out on this huge drop, got in the markets, probably honestly like right in here. You know, caught a little bit of profit, didn't take his profit. You know that for damn sure. because he's thinking this bitch is about to drop.
Right.
So then all of a sudden it starts going back up. Now it's at his fucking point. Now he don't know what to do. He's sticking in the trade because he's like, no, it's got to go down. And then no. Now he doesn't know what to do. Now he really doesn't know what to do. Now it's back up here. Now he gets out the trade. This is psychological, guys. This is the psychological part I'm talking about. So now dude gets out the trade. And then he sees it goes up a little bit. He's like, okay, I made a good decision. And then it just plummets.
Then it makes. Mm-hmm.
That will fuck with your head. That's why you got to be patient. Wait for this confirmation.
Got it.
Right here, we're just going to be waiting for this confirmation to break. So come back. So what I was saying is this is going to take at least 2, 3, 4 hours. Like I'm not going to come back till like 3, probably till like 6, 7 o'clock, honestly. But like realistically, it's going to take at least, it's got to break. So we got to have a breaking candle. That's 1 hour. And then we've got to have another candle that comes back to the zone. That's 2 hours. Then we have to have a candle that's green. That's 3 hours. You know what I'm saying? So realistically, you're looking at about 4 to 5 hours. Because we could have 1 green candle, 2 green candles, like a candle that doesn't go anywhere. That's 3, you know, and then 4, and then 5, and then 6, and then 7 is your green candle. That's 7 hours right there. That's 6 o'clock. You know what I'm saying? 5, 6 o'clock. Or price stays and comes back down, and then we wait for the sell setup.
And real quick, guys, that's like exactly what we should have waited on. What I should have waited on last night.
Yeah, I'm
Right.
gonna show you exactly Euro JPY, guys. Is that what you're talking about?
No, the GBP on.
But I'm gonna show you
JPY.
guys how fucking, or I mean, I'm sorry, how they should have not called that last night, that Euro JPY. They called the sell right here. Now, well, from what I just taught you guys, well, let me read. You guys already see my zones and stuff, so I don't want to, you know, it's kind of cheating. You guys are cheating. I'm just kidding. Let's draw this up real quick. First of all, we don't want to start on the hour. We want to start on the day because you want to get the overall which way is the market going. Okay.
Okay.
Okay, so it looks like it was in an uptrend, right? You can go tanning. Okay, I'll be done in a minute. So it looks like it broke the downtrend, right? So people are like trying to sell. This is how the market gets people, because people know these things. Like people, you can go on YouTube right now and type in how to a trend line. They'll teach you this shit, right? But you know they'll say once it breaks the trend line, then people will start selling it. Yeah, you might have made some money right here, but some people they'll see it broke the trend line right here and they'll start selling it. Well, you got to wait for the setup for it to continue to sell, because anytime something breaks, it always comes back to retest, to grab those sellers and buyers in and out of the market, because it's a psychological thing. A pullback is just to psychologically get people in and out of the market. The market takes the money from the impatient people's pockets and puts it in the patient ones, if that makes sense. Okay.
Mhm.
So on the day chart, real quick, I mean, you know, we just look and see which way the market's going. You know, the market was in an uptrend. It looks like, you know, it broke the uptrend. So let's just draw our major areas of support and resistance. Okay. So you see why price hit right here and stopped. You know what I'm saying? You see why it stopped right there and why it's pulling back, because of all the rejection right there. Now,
History.
hold on. So now let's go into the 4-hour chart. We're just narrowing it down even more. You know what I'm saying? Narrowing it down more and more and more and more and more. Now, where do we see? We see heavy resistance right here, right?
Yep.
There's a lot of wick action though. A lot of wick action. So this is where my zones come into play. I'm drawing. You see that wick, where it actually retested here and fell down. That's where I'm leveling it up with that. See, it's holding. You know,
Broke.
and then
Retest.
you see these wicks right there. So we know price can reject off that because of the wick. And then also right here. You see what I'm saying? So we see this happen. Like honestly, that was my trade setup. I had called this was a week and a half ago. I caught this sell. I mean, you guys would have too if you would have known. I mean, it broke the trend line, right? And then it came back and retested. I mean, absolutely perfectly.
And then red candle.
Red candle. If this would have been a green candle, I wouldn't have got in.
Right.
But look, so I'm gonna get back into the 1 hour chart. So this was yesterday. They called the sell right here. It was literally right here. Now, I do not know why, because from what I just taught you guys, honestly, if anything, I'm going to buy that bitch. Because it's probably going to retest that area.
Mhm.
And what did it do? Retested it. That's where I was talking about, was in this area, and I screenshotted it last night. Somewhere in this area, if you can see some type of bullishness, which means, you know, price holding, and sell it. So what did it do? It fucking hit it and dropped. They were literally 15 pips off. They just,
Yeah.
if they would have had their stop loss above the last high over here, then they wouldn't have got out. So like anytime I get into a trade, like if I were to sell this right here, I would have looked over here and I would have looked at the last high and I would have put it a little bit above that. So if we would have
Above that wick.
Yep, a little bit above this wick over here. So if we
Okay.
would've got into this trade right here, we would have waited till the candle closed. So we would have got in right there at 145, right? Now our stop loss would have been 292. What is that, about 15 pips? Yeah. 495. Yeah. 1495, 29 and 14. 15 pip stop loss. And it dropped
Minimal loss.
50 pips. Wait, more than that. It dropped 60, 70 pips. So you're risking 15 because like, and guys, for your first take profit too, you'd be looking at the first area of any time of, this isn't any major support or resistance, but as you can see, kind of like price was fucking around a little bit right there. So that'd been your first take profit, right? So you would have 40 pips. Then your second take profit, if you look over here, would be right down.
Yep.
So we're just waiting for it to come back down. We would still be in the trade, but then we would have our stop loss at break even.
Mm-hmm.
And just continuing to ride this trade down. Now, actually, what would happen is if this trade does go down, I like to trail my stop loss. Like if I have a take profit too, guys, like just know me, I don't take profit. I take profit too. I take profit when I'm up 20 pips. So, okay, I'm going to tell you exactly my process of when I get into a trade. Boom, red candle just formed. I go 1, 2, 3 trades. Okay. So if you have a $100 account, you should be doing 0.01 for every single trade.
Mm-hmm.
So that means you got a 0.03 in on the whole trade. Now, if you're doing, if you've got a $500 to $1,000 account, that means you should be probably doing 0.03 to 0.04 because you're going to be doing 3 trades, right? So that 0.03, 3 trades is going to be, 0.09, or if you do 4, that's going to be, 0.12, which you're not hurting yourself too much. So the reason why I do that is, so I get in the trade right here, boom. As soon as that bitch is up 20 pips, so 140, so we need it to get down to 840, right? No, not even that, 940. As soon as it gets to 940, boom, right there. I'm taking one of my trades out, automatically collecting that 20 pips. So for me, I'm automatically collecting the $200. At the 10-cent one, you're collecting your $20, right? Now I'm moving my stop loss break even on my other 2 trades, and then I'll take profit at the second take the first take profit. But then the second trade, I'm just going to continually to move my stop loss down, because if that, so like what will happen is, let's say, I don't want my battery to die here. Let's say price makes another move down, right? Now I'll put my stop loss at the last little pullback that it did right here. See, if price is down here, if price comes back up into this area, we don't want nothing to do with that, do we? Because we know it's probably going to do what? Come back up
Go
here.
back up.
Exactly. So we just take we don't take our loss, we take our profit. But we've already collected 20 pips plus, the other amount of pips on the other 2 trades. Plus you caught, and you know, another 30 because it came back and hit your stop loss at 30 pips in profit after you already collected 20 pips. So that's 50 pips right there if your trade doesn't, you know, actually bust off into a 100 pip trade or more.
Mm-hmm.
You know.
All right.
So real quick, let me plug my thing in real quick. I'm gonna look at a couple different pairs, see if there's anything else that we can look at, and then we'll cancel this recording here. JPY. Looks like see how many see this heavy support and resistance or this resistance or support area right here. I'm sorry, the floor.
Mm-hmm.
Look what happened when it did break too. Broken
retest.
retested, fell down. So what are we waiting for here? We're waiting for price to break above. We're gonna look at the day chart too to see which way this market's going. So we're waiting for the market to go up, come back down, retest, and hop in the trade. One or the other. Now for the opposite way. We're just looking for price to break below that. So if you can find like a pair that's, you know, stuck in support and resistance, that's fine. Then you just wait for it to break. Or if you find a pair where you see it just had a crazy breakthrough, that should get you super, super excited because then you know that you're just waiting for the retest. A lot of people, they'll see a market going up and break a support or a resistance, and they'll go crazy and get so excited and they hop into the trade. And then that's when those wicks form and then the price reverses on them. So that's why we just got to be so patient and know that these markets are open 24/7. Like these setups are going to happen day in and day out.
Mm-hmm.
So don't ever think that you're going to miss a trade. USD JPY. I remember calling this in the free chat like it was last week. Greg, are you on here?
Yes, sir.
Do you remember this buy? I don't know if you do, but it's in my Wealth with Michael one if you guys want to go back.
Yeah, that one and NU, bro, are clean as fuck.
Like I could still be in this trade, guys, because like look, this is what I would do. Price, I got in, price went up. All right. So now that price went up to here, I would then put my stop loss at just below this last high because we know if it goes below the last high, then it's just breaking the trend. So I'd put my stop loss, you know, just below that, never hit it. So this is where my stop loss would be right now for this trade if I was in it. Now, once price breaks above here, then I would move my stop loss, you know, right about into the middle of this zone because I know if it comes back into here, then we don't want no part of it. But now let's look at UJ real quick. UJ is in an uptrend right now, but it looks like it's consolidating like crazy. So let's draw up our support and resistance real quick. We already know. You guys can tell me what I'm waiting for.
We have to go back up and go back down.
Well, we're just waiting for what?
Retest.
Well, we're just waiting for a break right now. Yeah, and then once it breaks, you guys already know. Like he just said. The retest. Guys, this is so simple too because look, if this breaks, honestly, it's going to break a little bit farther down probably. When I draw these arrows, I don't mean it's going to happen right then. I'm just looking at it in the future. That way when it does happen. Because like just drawing this out gives you such a clear head. Because like I said, it's 90% psychological, guys. So if you can see it like this, it's going to help you so much better. Like I drew this like way before, as you can see, like this line is not equivalent to it at all. I was just guessing, like it was just a quick draw. You know what I mean?
Mm-hmm.
But yeah, so right here, we're just waiting for price to break it. And in all honesty, guys, if price does come down here, I mean this price or this was going in an uptrend. You know, this was in a heavy uptrend right here, bro, but it's in consolidation right now. So the price has been going up, but in all honesty, it looks like it's been just going sideways lately. So if price does break, you know, let me delete this. Whoops. If price does break, then it's in a downtrend because this trend line right here has been broken. You know,
Gotcha.
if we were to draw a trend line right here, you know, it's been broken and everything, but it's after it broke, it's just been consolidating. So really, it's just making up which way it's going to go, and we're going to be able to tell that by which way it breaks, and then if it retests, it retests. If it doesn't, it doesn't. Because if we look at USD JPY on the day chart, it was a buy for a while because it was hitting a heavy area of support or whatever. So like if you see something like that on the day chart, like I got in the buy because guys, look, this was on the day chart, right? So the day chart, like if you can see what I'm saying, like if you know which way the day chart's gonna go, then you know if you catch like from here to here, that's like 150 pips. You know what I'm saying? But like on the hour chart, you know, from here to there is only like 50 pips. You know what I'm saying? But what I'm trying to say is, if you, what I saw on the day chart before I got in the trade I was talking about, hey Greg, did you get in that trade? Was I saw on the day chart that price held at a former support level on the day chart, not the hour or the 4 hour, not the hour or the 4 hour, the day chart. So I'm like, price is probably going to go back up like it did last time. This is on the day chart, guys, not on the 4 hour or the hour. I don't want to confuse you guys. Okay. So I saw this green candle close and then this green candle close. That's a candlestick pattern right there that's showing you that it's going to reverse. These three candles right here. A red candle like that, a green, and then a green engulfing candle that's longer than this candle. That's showing you that price is reversing on the day chart. So I knew the overall move in the long during the day was going to be a buy. And this is what I saw right here. I didn't see everything else. I just saw that green candle. So I'm like, all right, I got to hop in and figure out where I'm going to be able to get into this trade to be able to follow that buy up with it. You know what I'm saying? Not just jumping in and then getting kicked out. It's like, this is where it was. Cancel. This is where it was actually, because like a lot of people, they might have saw it on the day chart and they see this green candle. That's what I'm talking about. It broke it, right? It broke your resistance or whatnot. So people are buying it, and then all of a sudden it sells. Which that's what we want, you know. But they're all scared as fuck, so they hop out the trade. And then what do we see? A green candle, because you see the wick that hit there. It hit there, and then what? A green candle. So boom, bought.
Then reversed.
And then it's continued to go up since. And that was because I saw on the day chart too that look at this point right here. Remember that point. That is this on the day chart.
Okay.
Okay.
Every right here, this candle right here represents all of today. So today the market, you know, has gone up, but since it's open today, it's gone down.
Got it.
I'm gonna end this one. You guys got any questions right now before I end it, actually, and then we'll get more.
No, you're gonna post this recording in the group though, so we can share it with our members.
Yes, sir. Yes, sir. No more questions.
No, it's been very knowledgeable. I've got a better understanding. I like the way you teach. Just you and Greg
so
both
much
teach
better.
really well.
I like the hard nosed teaching. I love it.
I'm just blunt. I'm very blunt, but yeah, it's so psychological, and that's why I am kind of like that, because it's psychological. You gotta be a bitch to these markets. You gotta make them be your bitch. Don't let them. Don't be the bitch that you're chasing. You know what I'm saying? Make them chase you.
Chasing dreams. What it looks like some people do.
That's what they're doing, bro.
They really do.
They might as well go put $500 on black or red and play the roulette table.
Facts.
Heard that.
Win some, lose more.
Here's another thing before I end this recording. The psychological game is so powerful, and I don't think anybody, you might decline this in your head, but overall, you know this is true. You know, if you're down, you're going to psychologically, you know, if you're up $100, right, you're going to be happy about that, right? but you're gonna
100%.
want to instantly want to make more. You're like, well, I can make 200, right? So you're gonna keep that trade in, right? You're gonna keep that trade in. Now, if you're down $50, you're about ready to take that motherfucker out, aren't you?
Yep.
Because you're down $50. You're the word down. That's the only difference. So like what I'm getting at is, don't let that psychological shit get to you. The main point was, people will sit there and be up $100 and they won't take their profits, but they'll fuck around and be down $50 and take their loss. So you'll never win that way.
Got to take your profits. You never go broke that way.
Take your profits. And that's why every time I get into a trade, I do those 3 trades. That way I automatically am collecting those 15 to 20 pips. And then I'm moving my stop loss break even, and I do not look at the trade.
And that way you at that point when you're
Takes
moving
all the
your stop loss at bare
psychological out.
minimum, you're not losing anything anymore. At least you're getting a little bit out of it. You might not get that 50 that was in there, but you'll at least get the 20 that was there.
And guess what else it does? It takes the psychological out.
Yep. Now you don't have to look at it
the trade
anymore.
actually go the way you wanted it to go. It takes the psychological part out, and then that's when your trading goes to 80%. Because you've got that psychological 80% part down. Because people say it's 80% psychological, 20% technical. I don't know. I say it's
90.
Yeah, I really
90 all day.
Because you can
Definitely 90.
Because you can learn this shit and know this shit all day long, but if you're not patient, and especially, I'm not gonna lie, like, if you've got a lot of people telling you what to do, like, figure out something that works for you. And if it works for you, it works for you. It doesn't have to work for everybody else, Like, some people tell me I trade too simple. Well, guess what? It's the fucking easiest way, and I don't have to trade. I don't have you guys realize I don't have any indicators on my chart. This is literally how I trade. The K.I.S.S method. Keep it simple, stupid. Like, make it so simple, because like, why have all the indicators and lines and shit all over the chart when it's 90% psychological? That's gonna fuck your head up. You know what I'm saying? Like,
it's gonna make you think too much.
Clear face. Yeah, you want to look at it in a clear head. That way you're not like contradicting yourself. Like, no, we know what we're waiting for. If this buys, if this goes and comes back and retests, I'm in. No questions asked. Like, none.
Yep.
I'm gonna set my stop loss 20 pips below, because we know if it comes back into this zone, then it's going to come back down here. Why? We don't want to be a part of that, but we will continue to follow it up though. Or if it breaks below and we see a bearish candle, and we put our stop loss somewhere right up in here, because we know if it comes back to here, it's going to go right back up here, but if it goes down, then we're in the trade. It's just following it. Now we're making the market our bitch instead of the market's being a bitch.
I love it.
That's all we got for today, guys. I'm gonna stop the recording right there. So I'm gonna make some more of these guys, and